It has two ways of how to defer the coupon. It can be either cumulative non-compounded or cumulative compounded coupon. Okay, and in certain circumstances, okay, because the main important thing is that this perpetual suku or perpetual bond is issued pursuant to FRS, which considered this to be equity from accounting point of view. But if, say for example, there is a new change made to the FRS, for example, and the accounting does no longer consider this to be equity from the accounting perspective, then there shall be mandatory redemption. Why? It serves no longer the purpose that they want. Okay? Okay, what we call the mandatory, sorry, this is mandatory deferral. Another one is what we call mandatory redemption. Sorry, I mixed the two already. This is mandatory deferral. In some suku, in some perpetual bond, they have mandatory deferral. If certain situation happen, then you cannot pay coupon. Okay, in mass they don't have the mandatory deferral, but we have what we call mandatory redemption. If, say for example, certain accounting event happen, then there shall be a mandatory redemption. Why? Because no longer serve mass in terms of the capital usage without having to issue equity. Okay, this is mass junior suku program, up to 2.5 billion in nominal value. The first tranche 1 billion has been issued already, taken by co-op. For that matter, this is the structure. This structure does not comply to international standard. Okay, I have to mention from day one. Okay, does not comply because of what? Because of, let me put the structure. Okay, then you decide where is the problem. Okay, the first one is very simple, and taking note also, this structure is put before mass is reclassified to be Sharia compliant company. Okay, that's why we have to identify certain Sharia compliant businesses. But if this structure or this suku is to be raised after mass is considered to be Sharia compliant status company, then this is no longer relevant. We can just go directly to the business of mass. Okay, mass is now Sharia compliant already. I think you are aware of that. Right? So now we have to identify certain business of mass that is Sharia compliant businesses. So some of the what we call the outlet and blah 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 put together, we identify that to be Sharia compliant business of the mass. Okay, so mass will contribute that Sharia compliant business. The suku holder will contribute cash, the normal suku holder, the normal musyarakah suku. Then mass will issue suku to evidence the contribution. Okay, I'm about to finish. Mass will issue suku to evidence the contribution of the musyarakah by the suku holder. Okay, come the semi-annually, mass will distribute the return. Alright, distribute the return. There will be two scenarios. There will be four scenarios. Sorry, there will be four scenarios. The first one is that the profit is enough to pay. Okay, the first one is the profit is enough to pay, and mass decided to pay. So then no issue. Mass will just pay the amount. The second one is that the profit is enough, but mass decided not to pay. So what we do, we come to the second leg after this. So put aside first. Mass got money but doesn't want to pay. Okay, that one scenario that I put on hold. The second one is that the amount, the profit generated is not enough. Say for example, the expected profit is 6%. Mass managed to only generate 3%. Okay, this is the point where the problem comes. Mass will have to top up to make it 6. Okay, that's where the problems come. Okay, so if say for example, the third scenario. The fourth scenario is that the money, the profit generated is not enough, yet mass want to defer. So what mass have to do? They have to top up another 3, then defer. Alright, another 2 scenario. 6 scenario, sorry, it's 6 scenario. Another one, the fifth scenario is that the profit generated is much more than indicative rate. What will happen? And mass want to distribute. So mass will distribute the indicative rate. The remaining will go back to mass as incentive. The other one is that mass got more than enough but doesn't want to pay. What they will do? The 6% will be cumulative, and another the balance will be given to mass as incentive. So there are 6 scenarios in terms of profit distribution. I hope that I explained it well. Okay, very technical, right? Okay, so now that is the problem. If MAS doesn't have fail to get enough profit to pay as indicated, then MAS will have to top up. That is the problem. MAS will have to top up. That's the first problem. I mean, if you're talking from international perspective. Okay, then there will be musyarakah sale and purchase undertaking. Musyarakah sale undertaking is one wa'ad. Musyarakah purchase undertaking is another wa'ad. Musyarakah sale undertaking is a sale undertaking given by the sukuk holder to MAS, where it mentioned, if say for example, MAS want to purchase, remember after 10 years the bank MAS has the right to call, right? So every time MAS want to call, then they will call on the sale undertaking. They will exercise the sale undertaking, then the sukuk holder will have to sell their interest in the business into to MAS Bank. Okay, that is musyarakah sale undertaking. Musyarakah purchase undertaking is actually when in case of winding up of the company, MAS will have to purchase back the business at certain purchase price. The problem is that this musyarakah sale undertaking and musyarakah purchase undertaking, there are formula to it, and this formula is agreed upfront. So these are the two problems that make this sukuk having a problem in terms of international standard. How this has been overcome in the Adib sukuk. Okay, Adib sukuk also got a problem actually. That's why if you refer to their OC, many people they don't know about this actually. In Adib sukuk, not all scholars of Adib agree to it. Okay? Not all scholars of Adib agree to it. Some scholars disagree to it. That's why they don't use the normal board of Adib. They don't use the normal board of Adib. They use only the what they call that, the working committee of the Sharan committee. Working committee of the Sharan committee. I don't remember the term, but not the full board of Sharan committee, Sharan board. Why some scholars they have a problem in accepting the way it is done in Adib. I come to that later. I don't have time actually. Okay, that is the situation for in musyarakah. So if say for example the deferment, say for example MAS, remember I put you 6 scenario. In 3 scenario MAS doesn't want to pay the amount, right? Okay, doesn't want to. What will happen in that situation is that they will enter into musawamah contract. They will enter into musawamah contract to pull back the amount to MAS. SC in this situation give the issuer two options. Either they give the normal loan, you give loan, or you do commodity musawamah. So the issuer decided rather than just put a loan, they use the commodity musawamah structure for a reason which I don't think I can reveal here. Okay, so that is a scenario where they have the commodity musawamah. So the money, after the money is paid to each investor, the money will be quote-unquote paid back to MAS by virtue of commodity musawamah. Okay, by virtue of commodity musawamah. And maybe Islamic is the CTT for this particular transaction. Okay, this last one, so I got another one. This is a very latest one in the market. I think some of you have seen this. The corporate reorg of Malakoff. I make it short here. Okay, I have another how many minutes? 15 the most. Okay, right. This is another corporate reorganization. Okay, this corporate reorganization is made by Malakoff for the purpose of benefiting from single tier tax system. Because of the changing of the tax system, so this corporate reorganization serves two things. The first one is to restructure back the Malakoff businesses. That's what they always say lah. To restructure back the Malakoff businesses. But the most important one is the second one, which is, I hope nobody not recording. But the main purpose is the second one is to take benefit of the tax change. Okay, and they save nearly billion for that, for the tax only. Okay, that is the purpose for this particular transaction. Okay, to save tax. But the main reason is for the corporate restructuring, for the the better optimizing of the structure lah. That is the term that we submit to whatever that has been submitted lah. Okay. Alright, so that is the purpose. So how it will do is that they will have a corporate reorganization where the company will have to create another company from Malakoff Group to Malakoff Power, M-Power we call it. The creation of Malakoff Power, where certain asset of Malakoff Power will be passed back to the Malakoff, certain asset of Malakoff Group will be passed to Malakoff Power. Okay, certain asset of Malakoff Group will be passed to Malakoff Power, and certain payment need to be flow to the Malakoff Group. Since Malakoff Group has issued sukuk already to finance this particular underlying that need to be transferred to Malakoff Power, so the sukuk has to be swapped from Malakoff Power to from Malakoff Group to Malakoff Power. Okay, I repeat, since some sukuk has been issued, okay, 5.6 billion have been issued to finance some of these assets that need to be transferred to Malakoff Power. The sukuk holder who own the sukuk has to swap the sukuk from sukuk Malakoff Power Group to Malakoff Power. The initial sukuk at the Malakoff Group is sukuk musyarakah. We swap that to sukuk murabahah. The second leg, when the sukuk is swapped to Malakoff Power, it is sukuk murabahah. That's the first exercise. I go to the exercise. Okay. As I mentioned, 5.6 billion is actually for the sukuk swap. Okay, this is the first time we swap sukuk for corporate reorganization. So we swap that sukuk 5.6 billion, and we raise another new fund of 300 million. That's the first exercise. Okay. The second exercise, by virtue of you swapping, the sukuk of Malakoff Power will be redeemed, and the new sukuk will be issued by the existing sukuk by Malakoff Group will be redeemed and to be reissued by Malakoff Power at the second leg. Right, that's the first one. The second one. The third one is that the issuance of Islamic equivalent of ICALs and RALs. The issuance of Islamic equivalent of ICALs and RALs. Irredeemable, convertible, unsecured loan stock and redeemable unsecured loan stock, RALs. So this need to be made Islamic because the holder of the sukuk are Islamic investors.